Imagine a world where money moves faster than your morning coffee order, where borrowing takes seconds instead of weeks, and where your phone, not a bank branch, is your financial lifeline. That's the revolution of fintech, financial technology that has transformed the way we save, spend, borrow, and invest. Over the last decade, fintech apps have exploded, reshaping the very foundations of traditional banking. Think of PayPal, Revolut, Robinhood, or local mobile wallets in Asia and Africa. These apps put banking in people's pockets, offering speed, convenience, and often lower costs. Traditional banks, once seen as untouchable giants, are suddenly on the defensive, forced to rethink their centuries-old practices. But the question remains, is fintech the future, or will banks adapt and reclaim their dominance? At the heart of this shift is trust and accessibility. Banks have historically relied on their brick-and-mortar presence, their regulated structures, and their reputation for safety. People knew their money was in vaults, protected by insurance and government oversight. But fintech apps changed the equation. For billions worldwide who never had access to banks, fintech became the first taste of financial inclusion. In sub-Saharan Africa, mobile money services like MPesa allow people without bank accounts to pay bills and run businesses. In China, Alipay and WeChat Pay dominate everyday life, far outpacing cash or credit cards. These aren't just apps. They're ecosystems that rival entire banking systems. For consumers, fintech feels liberating. Opening a bank account can involve paperwork, minimum balances, and waiting days for approval. A fintech app, just a few taps. Transferring money across borders through banks often means high fees and delays. Fintech apps cut those costs dramatically. Trading stocks once required brokers and commissions. Now anyone with a smartphone can invest in seconds. This democratization of finance has made banks look sluggish, even outdated. No wonder global investment in fintech surged past $160 billion in 2021, a number unthinkable just a decade earlier. Still, banks aren't going quietly. They hold advantages fintech can't easily replicate: deep trust built over generations, government backing, and massive balance sheets. Many are striking back by launching their own apps, acquiring fintech startups, or partnering with them. JP Chase, for instance, has rolled out digital-only services, while Goldman Sachs teamed up with Apple to offer credit through the iPhone. Some regulators are also tightening the screws on fintech, asking whether apps can truly safeguard consumer money the way banks must. After all, headlines about hacks, scams, and speculative crashes remind us that not every app is built on solid ground. The future may not be about one side winning, but rather about convergence. Imagine traditional banks adopting the agility and customer-centric design of fintech, while fintech apps embrace the security and oversight that banks are known for. The result could be a hybrid financial ecosystem that's faster, safer, and more inclusive. The rise of fintech isn't just a story of banks versus apps. It's the story of money itself evolving for the digital age. And in that story, the real winner may be us, the consumers, holding the power of finance in our own hands.